Okay, now look at the usefulness of production budget. Production budget serves as a basis of the preparation of the cost budget or cash budget. So production budget is the starting point, okay, of preparing the cost budget and cash budget. Production budget is very important, okay. After production budget, we'll prepare cash budget and all that, okay. So even all the other budgets, not only production budget, sales budget, purchasers budget, trade receivables budget, okay, all are important, okay. So now just look at the table here. So let's say if a company has opening inventory, closing inventory, then you can write values following this table. So first budgeted sales and then opening inventory, then you have to minus the closing inventory, and then at last you have to take the budgeted production value. So like product A is different, product B is different. So when they give two products, you can separate two lines and do like this for quarter 1, 2, 3, 4, like that. Okay, did you understand production budget now?
Yeah,
all
I understood that.
all the theory part in production budget, okay, right?
Yeah, it's fine.
Okay, now look at purchases budget. Earlier, I taught you when teaching production budget, I taught you the difference between production budget and purchase budget. So like that same thing. So purchases budget is the it represents the physical quantity and cost of total materials to be purchased during the budgeted period. So purchase budget will represent the physical quantity and cost of the total materials that we need to purchase, like how much quantity we need to buy, how much raw materials we need to buy, like example how much cotton we need to buy to produce t-shirts, how much sugar we need to buy to make Coca-Cola, like that, and the cost of each of those raw materials, they will represent all that values in the purchase budget, okay, during the budgeted period. That is purchase budget, okay. uh,
Okay.
okay, so while preparing purchase budget.
I can't hear you.
Okay. Can you hear me now?
Yeah, now I can.
Okay. Look at the factors to consider. Okay. Production requirements as per production budget. So purchase budget is based on production requirements as per the production budget. Okay. And then inventory policy, standard price for each item and all that. Okay. Standard price for each item of material required. That means for 1 liter to produce 1 liter Coca-Cola, how much sugar you need and the, what's the cost. All of that. Okay. That is
Okay.
a standard price. Okay, and then what we have to do under this is that.
Your voice is kind of low again.
Okay, so you need to know the cost of material to purchase bottle. Okay, yeah, that is what I said. So let's say a company needs to produce 10,000 Coca-Cola bottles this year. So for that 10,000 Coca-Cola bottle, how much sugar you need? So all those factors also you have to consider. Okay. Now look at the usefulness of purchase budget. To plan the purchases and place long-term contracts where necessary, taking into consideration the market position and trends in prices. Okay, so what they're saying is you have to, the usefulness of purchase budget is that it will give a plan, like where necessary, okay, like to plan the purchases and to make long term contracts where necessary, they will consider the market trends and all that, and only they will prepare purchase budget. So after preparing purchase budget, they will look at that, and they will it will help them to make changes to their business. It will help them in many ways. So that is one usefulness. The other point is that to plan the finances required for the purchases. Okay. So can you hear me, Amhar?
Yeah, now I can hear you. Now the voice is clear.
Okay. Did you understand the first point?
Yeah, I understood the first part.
Okay. Now to plan the finances required for the purchases means to buy raw materials, you need cash, right? Okay.
Yeah, we need
Now
cash.
purchase budget means what? The raw materials that you need to make Coca-Cola, the raw materials that you need to make t-shirt. So now to purchase that raw material also we need money, right? We need cash. So you can plan how much cash you need to pay for these raw materials. Did you understand that?
Yeah, I
That,
understand that.
that is what is meant by the second point. So you can plan the finances. That is meant by that. To plan the finances required for the purchases. Okay. So those
Okay.
are the advantages. Those are the usefulness of purchase budget. Now let's go to trade receivables budget. So tell me what is trade receivable budget? What is trade receivable?
Yeah, so it is the amount of yeah, cash or bank which we are supposed to receive for that financial month or year.
Can you repeat that clearly again?
Yeah, so it is the cash or the bank which we are supposed to receive for that financial month or the year.
Okay, trade receivable means creditors or debtors.
Uh, they are the debtor. No, they are the creditors.
No, wrong. Trade receivable means debtors. Trade payable means only creditors, suppliers.
Um, yeah,
Okay.
yeah.
Okay. Trade, always remember trade receivable means debtors. Okay.
Okay.
So if we sell a product on credit, okay, the people who are buying that product, it's on credit, right? So they will give us money later. So when they owe us, then they are known as debtors. Did you understand that?
Yeah, I understand that.
Okay. So trade receivables budget means how much the debtors are going to give us in 1 month time or in 2 months time based on the budgets that we prepare. So it's basically means like how much the debtors are going to give us in a specified period of time. Okay, how much the business is receiving from the debtors. That is prepared. Uh, Trade receivable budgets are prepared based on that information only. Okay, how
Okay, okay.
long? Okay, how long the customers have given the time to pay by the business. Did you understand that?
Yeah, I understand that.
Okay, and then trade payable means now in a company, we are the customers, we are buying from them. So that main company, the company that we are buying, okay, so that company will give us on credit. So at some point of time, we have to pay them, right?
Yeah, we have to.
So we are creditors to them. We are the creditor. Did you understand? That is meant by creditors. Okay. So that
Okay.
company is supplying us raw materials and we are paying them later. So if that company is supplying us raw material, that company is the supplier, right?
Yeah,
So trade payables budget means how much we are going to pay the suppliers. Did you understand that?
yeah, I understand that.
Okay. If you want, you can take a note of that. Okay.
Okay.
Okay. That is the difference between trade receivable and trade payables budget. Okay. So, okay, so let me just explain you what is on my notes. Okay, the trade receivable budget showcases the amounts that will be owed to the business by credit customers at the end of the month of period. That is what I told you. Okay, so it's the amount that is owed by our customers, credit customers. So they are the debtors for us. This budget is closely linked to the production, sales, and cash budget. Okay, so this budget is linked, trade receivable budget is linked with production, sales budget and cash budget. Okay, it will take into account the length, the duration of the credit period that is allowed on customer balances outstanding. Okay, so that is what I said, how long the customers have given the time to pay by the business. Okay, on the balance, the outstanding balance, okay, that they have to pay. So they are the debtors, right? How long we have given time for the debtors to pay by the business. Okay, that is meant by that point. Okay, that's all in that. And then look at the table that I have given. So balance brought down, and then whatever credit sales that you incurred, you have to write in these columns. Okay, so this three column, this is for maybe for quarter one, quarter two, and quarter three. So quarter one credit sales you can record, and you can get the total. And then cash received from credit customers. So when the customers are giving you money, when the customers are paying you, then you can write that. Okay, and then if you incur any bad debts, then you can write here, and you have to minus. Even the cash received you have to minus, and then the discount allowed, that also you have to minus, and then you have to take all that to the total column and get that value. So like that, even for quarter two, quarter three, you have to do. This is the table. Okay, but this table won't be same. In some questions it might be different. Did you understand all this now?
Yeah, I understand it all.
Okay. Now look at trade payable budget. Okay, so the trade payable budget forecasts the amount that will be owed to trade creditors, that is suppliers, at the end of each month or period. It is linked to the purchase budget and cash budget. So whatever I explained you only they have told here. Okay, like how much money that we are going to pay the suppliers at the end of the month, like that. Okay, so that and also this budget is linked with purchase budget and cash budget. Okay, so let me tell you how it is linked. Before that, look at the table. Okay, we have balance brought down, and whatever the credit purchases that we did, we have to add that, and then we have to get the total, and then we have to minus. So when we pay cash to our credit suppliers, cash paid to credit suppliers, we have to minus that, and then we have to minus any discount received also, and then get the total. That's all. Okay, so this also can be different according to the questions. Okay, now let me tell you the difference. Let me tell you the linking part now. So in under trade payable budget, I have told that it is, look at my screen, it is linked to purchase budget and cash budget, right?
Yeah.
So do you know how it is linked?
So yeah. So sorry.
Do you know how it is linked? Whatever you know, you can tell me. How purchase budget and
Yeah.
cash budget, how that is linked with trade payables budget.
So the purchase budget will be linked to the trade payables budget because now the trade. So when buying material to in order to make a product, so if you are buying in bulk, which it will be normally bought in credit sales. Sorry, credit purchases. So that would go as a trade payables, and in cash budget it would go. It's linked because we are yet to pay that, so we need to take the estimate of the purchase price.
Okay, correct. Okay, what you said is correct. Okay, yeah. Okay, what you said is correct. That is how it is linked with trade payables budget. So until this, do you have any doubts?
Oh no.
Okay, now let's go to the cash budget. Okay, cash budget. A cash budget is a financial plan of future cash incomes, that is cash inflow, and cash expenditure, that is cash outflow, for both revenue and capital items for a period of time. Okay, so cash budget is a financial plan of future cash income and future cash expenditures. Okay, um okay, over a period of time. It is drawn up to help managers to become aware of any potential shortage or surplus of cash inflow. So why we are drawing up cash budget? To help managers to become aware of any shortage, or to become aware of any surplus of cash inflows, to become aware of any deficit. Okay, all of that. Okay, when we prepare cash budget, okay, we can when preparing, we can see whether the future of the business whether the future whether in the future the business will run out of cash. in the future whether the business will run out of cash. So if the business runs out of cash, then we can arrange an overdraft facility or we can borrow from banks, all that. And they will make changes to improve the business. So cash budget will be useful in that case. Did you understand?
Yeah, I understand.
And also cash budget is prepared for future estimates, okay, of both income and expenditure, not only expenditure, not only cost, even income. Okay.
Okay.
uh, or surplus of cash inflow. This means that in the shortage funds can be sourced from elsewhere or an overdraft arrangement can be made with the bank. This is what I explained you right now. Okay. In the case of a surplus fund, in the case of a surplus, funds can be invested so that greater returns can be made on the money. So now, if we identify that surplus has occurred, we can take the balance money and we can invest somewhere else, or we can invest in our own business and generate a greater return. Did you understand? So to
Yeah,
identify
I
whether
understand.
to identify whether the business has performed well or to identify whether the business has not performed well, in all that cases cash budget will be very useful. Okay. So
Okay.
surplus means more cash in the business. It's like profit. Deficit means less cash or no cash in the business. It's like loss. Okay. And
Okay.
then look at the next paragraph. A cash budget considered all cash incomes and expenditures but ignores non-cash items such as depreciation. So that is the disadvantage. It does not, the disadvantage of cash budget is that it ignores non-cash items like depreciation, all that. But a cash budget will consider all cash incomes and expenditures only. It ignores non-cash items. Did you understand that?
Yeah.
Okay. Now look at the advantages of cash budget. They are saying it helps to ensure that there is always sufficient cash available to allow the normal activities of the business to take place. Okay, so cash budget will help a business, like it ensures that there is sufficient cash available. Okay, um, to allow the normal activities of the business to take place. They will help us to make sure that we know whether we have sufficient amount of money in the business. Okay, to run our business, to run the normal activities of the business and all that. The second point tells you that it will highlight times when the business will have cash surpluses, thus allowing management time to arrange short-term investment of those surpluses in order to gain investment return. So that means cash budget will highlight when the business will have, it will show us when the business, whether the business is having a surplus or whether the business is having a deficit. Okay, all that. Okay. uh, and also if the business is having a shortfall in money, then we can arrange a overdraft facility, or we can arrange a short term bank loan, all that to gain money and make the business successful. Did you understand that?
Yeah, I understand it.
Cash targets are achieved and staff members are motivated. So another advantage is that cash targets will be achieved, and when the cash targets are achieved, the staff members will be motivated and all that. Now look at the disadvantages of cash budget. Restrictions are placed on an expenditure. This could lead Okay, this could lead to a lack of funds available for an unexpected opportunity to which is not undertaken could meet capital loss. So that means now now restrictions are placed on an expenditure. That means now restrictions means we will limit our expenses. Okay, so while looking at the cash budget, restrictions are placed. We will limit our expenses. If we feel like, if the business is if the business thinks that their expenditure is a lot, then they will place some restrictions to limit the expenses. That is meant by restrictions are placed on expenditure. Did you understand that?
Yeah, I understand that.
So when they limit the expenditure, when they place restrictions on the expenditure, then this could lead to a lack of funds available for an unexpected opportunity, okay, for an unexpected demand. So in that case, we will not be able to take that demand, we will not be able to meet that demand, okay, and if we don't meet that demand, then it will lead to a loss. So it's like that, okay. And then look at the second point. If the targets are set too high, then the cash restrictions are also high. So like you will be limiting your expenses, right? You will be managing your expenses. So if the targets are also set too high, then the restrictions also will be too high. So if the cash restrictions are too high also, it's not good. Okay, so let's say important expenditure. For a business, there is very important expenditure. Let's say a machine has, let's say a machine has broken. Okay, so when the machine is broken, you have to somehow buy that machine, right? Then only you can run the business. So that is an important expenditure. You have to meet that expenditure. So when you impose cash restrictions in the business, then it's very hard for them, right, to cope up with the machine breakdown and all that. Did you understand?
Y- Yeah, I understand that.
Okay. Okay, now look at format of cash budget. Okay. So for cash budget, we will prepare to calculate whether we have enough cash into the business. Okay, it can be high or it can be low. Okay, so receipts. Look at receipts. Receipts means cash coming into the business. Cash inflows. Another word is receipts. Okay, so we can say cash inflows also. So the cash sales, collection from credit sales, collections from sale of non-current assets, NCA, and then cash inflows, that is receipts from loans and other receipts. So all that you will record under month 1, month 2, month 3, if not quarter 1, quarter 2, quarter 3. If not based on the budget requirements, you will draw up columns and you will write. And then you will get total receipts that will come under this. And then you will write all the payments, that is cash outflows. Okay, payments for cash and credit purchases, payment for expenses, cash drawings, purchase of non-current assets, repayment of loans on debentures, other payments. All that you will record under this column. Okay, and then total payments. Okay, so after payments, after you record all the payments, you will write it total payments, and then you will add all the payments and write under total payments. Okay, so this total receipts is A. I have put that as A, and total payments I have in brackets, I have put that as B. So under the next line, you will write net receipts and payments. So how will you calculate net receipts and payments is that A minus B, that is total receipts value minus total payments value for 1 month. For month one's total receipt, that answer minus month one's total payment. Then you will get net receipts and payments. Did you understand that?
Yeah, I understand that.
Okay, after that you will take bank balance at start. So that means at start means opening bank balance. That one you will take here, and then this net receipts value and bank balance value you will add. Then you will write it under this line has bank balance at end. That means closing bank balance. That will come under here. Okay, wait. Okay, so that will come under this part. Okay, and then now month one's closing balance, that is bank balance at end. So month one's closing balance will be month two's opening bank balance. Did you understand that?
Yeah, I understand that.
So it's like this. This month, this one will be the opening balance in month two, and now month two's closing balance. So net receipts and payments you will get by A minus B, total receipt minus total payments, and then you'll get net receipts and then opening bank balance. That one you will get by this figure, this value, and then you will add both and put it under closing bank balance. So month two's closing bank balance will be month three's opening bank balance, this part. Okay. So again in month 3 you will add both and put under closing balance. So again month 3's closing balance will be month 4's opening balance. So it goes like that. You understood that, right?
Yeah, I understand that.
So let's say bank balance at month 2 is minus 100. For example, let's say minus 100 pounds. So under opening balance also you have to take 100. You will take 100 or minus 100 under month 3's
Yeah,
opening balance.
minus 100.
Yes, minus 100. Same thing you will take. Okay, until this, do you have any doubts?
No, no doubts.
Okay. Um, So look at inventory budget now. So opening inventory, you will get it here, and then plus purchases, whatever purchases you have incurred, you will get whatever purchases. That means the raw materials that you bought, all that you will write under purchases, and then minus sales. Okay, so whatever taken to, okay, so whatever the sales that you this thing, whatever taken to your production, you will minus that. Okay, so minus all that and then closing inventory. Whatever unused raw material you will take under closing inventory. So when you add opening inventory plus purchase minus minus sales, then automatically you will get a value and that will be a closing inventory. That's all. But then this format, this table won't be same for every question. It can be different. Even cash budget, that the statement, the format I gave you, the table I gave you, that won't be same for every question. It can be different. Okay. So that's all in budgets. Did you understand this budget chapter completely now?
Yeah, I understood.
Okay. Do you have any doubts?
Oh no, as of now, nothing.
Okay. So this is October 2021 past paper. Okay, so in this question number 2, we are going to do that. Okay, look at this question. They are saying, A part, they are saying you to prepare revenue budget in units of pies sold. So first one you have to prepare in units sold. Second one you have to prepare revenue budget in pounds. Okay, so okay, so in this you have to prepare according to month wise. 4-month period, July to October. So what you have to do, you have to draw 4 columns, July, August, September, and October. Okay. So first let's see the question now. Okay. Jolly Pieman PLC produces pies at its factory and sells the pies to supermarkets. The company is preparing the budgets for the next 4-month period, July to October 21. The following information is available. Sales are seasonal and increase in the winter months. Sales are budgeted to be 150,000 pies a week in June and 150,000 pies a week in July, rising at a constant rate to 250,000 pies a week in December and 250,000 pies a week in January. So, by this information, by this first 2 point, by this second point, you have to prepare the first part. That is revenue sales budget in units. Okay, so how will you prepare this? Uh, First, what you can do is you can draw 4 columns like this. Okay, first one will be so here you have in this first column you have to write revenue budget RB, revenue budget, and in brackets you have to put units. Okay, and then so it's like this, and then in the second column you have to write the month. So you have July, you have August, September, and then October. So what does this mean? Can you tell me? Sales are budgeted to be 150,000 pies a week in June and 150,000 pies a week in July, rising at a constant rate to 250,000 pies a week in December and 250,000 pies a week in January. So based on this information only, you have to write the first part. So how will you do? First, we can do weekly demand. So can you explain me this? How will you do this?
Yeah.
Can you try explaining me?
So for weekly, yeah. So for weekly demand, in July we can write 150,000 into 4. So after that, in August, September, October, November, December. So until December, we need to see how many weeks we have, and then we have to take 100,000 and divide that by the number of total weeks, and then add that into the each month.
Okay, you are complicating things. First, you can just find the weekly demand. After that, if you want to get the monthly demand, because now in this question, they're saying you to prepare month-wise, July, August, September, October. So first in the first column, just find only for the weekly demand. And then if you want to get the monthly demand, then weekly demand into 4. Did you understand?
Okay, yeah,
Okay, so first tell me only weekly demand. You just
yeah. So for July
give a
it will be
try.
150,000.
For July, 150, correct. For August,
Yeah, August will be 1 minute. 170,000.
why 170,000?
So 100,000 divided by 5 months, which is 20,000.
Okay,
So 150,000 plus 20,000 equals 170,000.
okay. Why are you dividing by 5?
So August to December, it's 5 months.
Okay, correct. Your what you said is correct. 170. Then for September,
Yeah, 190.
yes, very good. October,
Yeah, and 210.
okay. November, you don't need to write, but then I'm just asking you. November,
Yeah, 230. Yeah,
okay.
230
December, 250.
and 250.
Yes, 250 in December and 250 in January. Okay.
Yeah.
So when you want to get the monthly demand, so in the next second column, you write monthly demand, and then uh, here just write 150,000 into 4 and get the value here. Okay,
Okay.
get
Okay.
the value here. 170,000 into 4, 190,000 into 4, 210,000 into 4, and then you will get answers, right? So that's all. Don't
Yeah.
need to take the total or anything. That's all. You just leave it empty. So if you do that, you will get 4 marks. All right.
Okay. Okay.
Now look at the second part. Revenue sales budget in pounds. So again, you have to draw columns like this, but instead of units, you have to put pounds, this
Pounds.
pound mark. Okay.
Yeah.
So revenue budget, this pound mark, July, August, September, October. This will be same. But earlier we didn't put units or anything, right? So here
Yeah.
this is regarding pounds, right? So under July you put this pounds mark on top of this, like this,
Okay.
or on side of
Okay.
this. Okay. So here also same for September, October also same. So now how will you do sales units? So instead of weekly demand and monthly demand, you won't get because this is a different answer. So for this you will write sales units. So under the first part, you write sales units. So what's the sales units for July?
Yeah. 115 to 4.
Yes.
150,000 into 4, which is 600,000.
Yes. So whatever answer you got in first part, the revenue say, budget in units. So can you remember I told 150,000 into 4 you have to take for July, 170 into 4 you have to take for August. So all those are sales units. So that answer only you have to write under sales unit column. Did you understand?
Yeah, I understand.
Okay, so 600,000 will be here. Like that, you'll get for August. August is 680,000. September is 760,000, and October will be 840,000. So after that, you
Yeah.
have to write selling price. SP, selling price. So what's the selling price? Look at the question. They are saying each
Yeah.
pie sells to the supermarkets for 1.20 pounds. So you put selling price and just write 1.2. 1.2. So for every month, write 1.2 and put lines like this and then take the total. How will you take the total? 600,000 into 1.2. For August, sales unit value into 1.2. For September, sales unit
No,
value.
actually,
What?
no. So receiving the money for 50%, right?
I can't hear. What did you say?
Yeah. So they're receiving money only for the 50%, right? Not for 100%, right?
No, 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 no. This part has nothing to do with sales budget. Okay, this 50%
Okay.
part has nothing to do with sales budget, sales revenue budget and units sold. The only this part,
All right.
only this second point and third point has to do with sales budget. Okay, this 1.2
Okay.
until this. So after that, this 50% paid for the same month as sales, 50% that you have to do when you are doing the third part and extract from the cash budget. When you are doing this part only, you have
Okay.
to look at that information. Did you understand?
Yeah, I understand.
So when we are doing the third part, I'll explain that to you. Okay.
Okay. Okay.
So sales units into 1.2 that you will get. So sales 600,000 into 1.2 is 720,000. So you can calculate that, right? For August, sales unit
Yeah.
into
Yeah.
1.2. So calculate everything and get the total. That's all. That's all for
Okay.
sales budget in pounds. So when you do that, you'll just get 4 marks. Okay. And even the A part first one, that's all. What I taught you earlier, that's all. So these points, 50%, that one you have to do changes when you're doing the third part, Roman number 3. Okay.
Okay.
Did you understand this A part now? First one and second one?
Yeah, I understood that.
Okay.